All right, I have a quick quiz for you, and this will be for more so beginners of day trading, those just getting started. But in all actuality, you could have a lot of experience day trading already, and this could serve just as a kind of a friendly reminder of something that you always need to be remembering and always need to keep in mind, because at the end of the day, over a grand picture of things, this is one of those topics, and maybe not the most exciting topic, but a topic that's going to help you survive the markets. And if you can survive in the markets, then that's the big step, because by surviving, you can ultimately thrive. So without further ado, I'm not going to, build up any sort of drama. Let's just hop right into the quiz. So what we're looking at here is a Tesla chart. And I mean, this serves anything. So not just Tesla. I mean, this serves also beyond stocks. This could serve to cryptocurrencies, Forex, futures, anything. So the idea here is not just Tesla or just stocks. This involves just day trading in general, no matter what asset you're actually trading. So for example's sake, in the quiz here is you bought right there, and you can see that the price now starts to go down. So my question to you is, what are you doing right here? Are you buying? Are you selling? Are you buying more? Are you simply holding? So, I mean, that's the question. Let's go to the next candle here. Okay. And you can see here, it's gone down even more. So the question continues. Well, what are you doing in this situation? Are you buying more? Are you holding? Are you getting out? What are you doing? Let's go on to the next candle. Okay. Now it's all the way down here. So what are you doing? Buying more? Holding? Are you getting out? What are you doing right here? So I just want to carry you through with what ultimately happens. And there you go. You can see the price ultimately made quite the move in the upwards direction. So like I said, it's up to you. Hopefully you're being honest with yourself on what you would have done, how you would have answered those questions. But let's go on to something else. So same exact question, or let me set up the premise of the question here, but you buy right there. And let's just see what happens next. So the question becomes, well, what are you doing? Are you buying more? Are you holding? Are you selling and getting out? So like I said, just what would you be doing? That's the question. And let's see what happens following that. And you can see, wow, quite the move upwards. Again, how did you answer those questions? That's how you're going to need to just kind of keep an inventory check. But there you go. Now you can see what happens after you didn't know what happens, right? So there's a reason why I'm not showing you what happens next, because, well, then it would be too easy, right? You can't have hindsight, because then it's way too easy to know what you would do. But like I said, let's go on to one more. All right, same scenario here. I think you know the context, but let's say you buy somewhere right around here. This thing has gapped up big, pulls back, so you're buying right around there. So as I stroll through the candles, the question, right? What would you be doing? Would you be buying more? Would you be holding, or would you be getting out? So you can see there, big pullback, big red candle there. More red right there. So again, just at this point, would you still be in? Would you have been buying more? Or would you just simply be holding? Just, and like I said, just be honest with yourself. What would you be doing? What does your strategy say that you should be doing, And then look at that recovery. Very, very impressive. Back up it went. So now that you have full hindsight, I mean, how would that have turned out for you? So, and only know the answer, but hopefully you weren't cheating and looking ahead and, okay, well, where are they at? So I know how to answer this the right way. Hopefully, like I said, hopefully you're just taking it at face value. So there you go. 3 different questions, or not necessarily 3 different questions, but 3 different examples with the same question. But now I want to show you, and so we can take this kind of from the realm of theory, which is where we're kind of at right now, but I'm trying to keep this very realistic. But I want to show you a situation and a section from one of my live trades. If you're not familiar, here's a quick plug. Another playlist that I offer is me where I record myself trading live, so you can go watch all those videos if you want. But I want to show you just a little snippet from one of those videos here, and it shows kind of this exact same premise where I do ultimately buy, but I want to show you how I ultimately played it and then how things turned out. So maybe at this point, 622 would be an interesting area. So in there at 1010, looking for a break up through 622. And then ideally to new highs here. But step one needs to be getting up above 622. So pulling back a bit here, let's see if we can get somewhat of a hammer candle. So just trying to give this a little wiggle room here, see if it wants to try to recover back upwards. Going long is just not my thing. Out there for $600 loss. Well, that was not pleasant. Yeah, definitely was not fun. Definitely was not pleasant at all to take that $600 loss. But for reference to sake here, right around there is where I sold, and right around there was where you saw the minus $600 take place. But let's now look into hindsight, and let's see what happened next. Look at what Tesla did. Tesla, literally, all it did was bleed and bleed and bleed and bleed and bleed and bleed some more. And if you're wondering what happened next, it has not come back. And because this was options trading, there is expiration dates. So you can't hold and hope forever with options, because things will expire on you and then it's just totally game over. But even if you're like, well, Clay, then you should be doing stocks. I'll address that here in just a little bit. But do you see where I'm going with this now? And like I said, I'm not trying, well, maybe I was trying to trick you a little bit, but if I did trick you, that's okay. That's the whole point. We're trying to learn here, right? As a beginner, hopefully you're being honest with yourself so you can improve and get better. Or like I said at the beginning of the video, if you already have some experience, I think you probably see full well the learning lesson here that I'm trying to remind people of. It's not exciting at all. It's one of those boring topics, risk management. So yes, I do realize that in those first three examples I showed you, you would have been okay had you chased the price, had you bought and then held and hoped. Okay, it'll go back up. It'll go back up. Because yes, in many situations, the price will go back up. You're absolutely right. But all it takes is one of these, just one of these. And again, I'm not talking in theory here. You just saw me take this exact trade. All it takes is one of these where you deploy that mindset of it'll all go back up. It'll go back up. Just hold. All stocks eventually go back up. Just hold. It'll go back up. I mean, I remember being a beginner, just getting started, and that was the mentality because, yes, you worked hard for that money. Yes, if you get out right now, that means that it's a loss. And, you've probably heard it, depending on how long you've been around. Well, you know what? It's not a loss until you sell, right? Because unrealized gains versus realized gains. So like I said, if that's what you fell into, if that was what you deployed for those first three strategies where you're now, can you imagine this? If you were answering those questions, and it's okay if you were answering this way, just be honest with yourself so you can realize how bad of an answer it actually was. But if you're somebody that was answering in those first three scenarios, oh, well, I would be buying more. Oh yeah, I'm buying more. I'm bringing my cost basis down. I'm going to average down. Well, I mean, think about what averaging down would have done in this situation. See you later account, buy account. It's gone. It's gone. Especially in the world of options where there's that much more leverage and things can just expand that much quicker. So in this situation though, and this is ballpark estimates, I took the loss at $600 way up there. So it is not unreasonable at all to know that this $600 would have been easily over a $2,000 loss down here. And $2,000 I think is probably being a little too conservative right there. So the question becomes, okay, well, what sort of hole looks better to dig yourself out of? Would you rather be needing to dig yourself out of a $600 hole or a $2,000 plus hole? I should probably change that to like $3,000. It would have been way more than $2,000. In fact, I am, because I'm trying to be conservative here, but I need to expand this. At least $3,000. And again, even that's probably too conservative. But the key question remains, what would you prefer to have to dig yourself out of? it's a stupid rhetorical question, right? Well, of course, Clay, the $600 hole is much more manageable than a $3,000, probably even bigger hole. That very well could have happened. Again, this is why, in a very sick and twisted way, when I took the loss and then how I saw things play out, I'm like, well, I mean, this is, well, first off, that I've never, well, I don't know about never, but that $600 loss, it's been a while since I felt that good about a loss. Because yes, in many situations, you be disciplined, you sell, you get out, and then the price goes in your favor. And you're like, well, if I would have just held, I would have been okay. I've had that voice show up. I've done that many times. But I'm also telling you from experience, and this was a good experience because I avoided it, but there are freight trains out there that exist. And all it takes is one of these freight trains, one of these semi-trucks to just run you right over. And like I said, if you were somebody that was answering, I'm buying more, I'm buying more, I'm buying more, I mean, that number would have been a whole lot bigger, and you just don't want to do that. So the moral of the story here is you got to just get out. You got to manage risk. You got to protect your downside and protect your capital, because if you don't, you just never know when one of these trades are going to come along. And I realized, well, Clay, it hasn't happened to me. Everything's worked out. And I know that's the cruel joke the market plays on people. It'll allow you to think that bad habits, bad behaviors, and I assure you, holding and hoping, averaging down, those are bad behaviors that will eventually, serve as a sledgehammer to the face. The market's just quietly luring you in. And that's what's so crazy about the market, is if you were to touch a hot stove, every single time, the stove is going to tell you that was a bad behavior. You're going to get burned. But the markets are not like a stove. They'll let you touch it. Oh, yeah. Let's let this person think that they can touch the stove. And then, boom, just like that, it will go nuclear on you and melt your hand right off without any sort of, expectation at all. But here's the best part about just managing risk. As annoying as it can be, here's the best part of it. Now, before I go any further, I'm just going to address the potential trolls right now because I get it. People, that's all you've made. That's good for people that are making way more than this. But my personal context, this is a side hustle for me. So these results that you're seeing right now, on average, are like 30 minutes a day, probably even less than that. So I get it. And again, I'm all for people making tons and tons of money. But for me, I don't feel like being chained to my computer. I don't feel like taking insane amounts of risk. So for me and my time in life as a father of 4 kids, that's not doing this for a ton of money, just for the freedom of time. Like I said, if I can average these sorts of gains and make this sort of money on average 30 minutes a morning, I am more than happy with it. So with that out, before, like I said, I'm going to try to be a little proactive against the keyboard warriors. But so with that all context in play here, so that was a day right there where I took the $600. Clay, that's not $600. Well, exactly. Because I made a couple more trades and I was able to manage the risk a little bit more and bring it down to $210 loss on the day. And then you can see the next day there, and that day was actually not very good of trading. I did some stupid things. I had some errors, just me pressing wrong buttons, just dumb things. Yet, even with me doing dumb things, not only did I wipe away that loss, I still walked away net positive over those couple of days. And that's the point of risk management. It's super annoying. I'm not refuting that. But when you manage risk, when you keep those holes manageable, it allows you to chip away at those holes. So in this situation, brought the hole from 600 down to 210. But then the next day, you don't even have to trade like a superhero, and yet you can still recoup those costs. And that's another little miniature quiz question to throw in here real quick. And so let me ask you this. When you take losses, do you need to trade like a superhero in order to get those losses back? If you're saying, yes, I need to trade like a superhero, I need to just put on my cape and I just need to be so good in trading. That's another sign that your risk management department is not operating as it should, assuming you even have a risk management department. And again, if it's okay, if you're like, yeah, I do need to trade like a superhero, okay, at least now now you can start to correct it. So that's the whole point. I'm not trying to talk down to anybody. I'm trying to just point out flaws that I've seen all the time, I've done myself, so that you can start to get better from them. So just keep that in mind. That's another little question you can be asking yourself. When I take those losses, is it oh, great, and that's going to take me multiple days, multiple weeks, multiple months to get that loss back? Well, in that situation, again, there's a major flaw with your risk management. But I want to address the final thing. And the final thing is this. Well, Clay, I understand options, or even if I don't understand options, you said that they were different because options expire, so you can't just hold and hope forever. And that's a fair point, more than fair. Well, here's my counter to that is, okay, well, you have people that were buying up here on Tesla in the 880s, the 900s, And as of now, as of the recording, multiple months later, they're still holding and hoping, and their money is not growing at all. And I know, well, Clay, it could still eventually go back up. You're absolutely right. But what is not being factored in during this part is the OC. What's the OC? The opportunity cost. Meaning, when you are a trader and you have a valid strategy and you know what you're doing and you manage risk, when you just get out and take the loss, well, you can put that capital back to work and regain those losses. But when you sit there and hold and hope and hold and hope, think about it. For these people up here, this has now been multiple months of opportunity cost. So the question for them becomes, okay, well, had I just sold up there, had I just sold because I have some sort of risk management department in place, yeah, it would have been a loss. But the question then is, well, over this time period, could I have made up that loss within, let's see, 1, 2, 3, basically 4 months? Could I have made up a well-controlled loss in 4 months? If you have if you have an actual strategy, if you have a valid strategy, I'm going to go ahead and answer that. Yes, you can absolutely make up a well-controlled loss over the time span of 4 months, and not only make up that loss, put a whole lot more money in your pocket. So even if the price does go back up there, even if those people make money, you got to factor in the OC, that opportunity cost. I mean, how much money more could you have made by simply just taking the loss in the first place so that you don't miss out, so that you holding doesn't cause you to, have a cost of missing out on a whole lot of other opportunities. So just keep that last part in mind is, this discussion has nothing to do with options trading and what you definitely have to in options. But even with normal stock, even with crypto, even with anything that doesn't expire, don't forget about OC, the opportunity cost. So hopefully you found this video helpful. And like I said, I was trying to trick you maybe a little bit with those quiz questions, but in a good way. So hopefully you don't you're sneaky. You're that wasn't my intention in a mean way, but in an educational way, because this is an educational channel. So hopefully you're walking away with this. And if I kind of got you, well then good. I'm glad I got you. I'm glad you know that you got, because now you can start to fix those and start to, pursue areas of your trading that are going to be flaws that hopefully you believe me, since it was literally a real life example, can and eventually will certainly come across your path. And for those of you that maybe have more experience, if you're up for sharing a horror story, feel free to leave those down in the comment section below. But hopefully this helps you. Hopefully this kind of opened your eyes to, like I said, not the most exciting topic to talk about, but topics that are definitely the most important. So if you enjoyed this video, please hit that like button, leave a comment down below. And if you have suggestions for other videos, also, I'd love to hear from you. Leave those down in the comment section. And I'm not going to ask you to subscribe. That always seems so, I don't know, like if this is your first ever video you've watched of mine, if you want to subscribe, thanks. But I can't stand when people are like, oh, you've watched 10 seconds of my first video, subscribe. No, I'm not going to ask you to subscribe. But if you did like this video, then yeah, check out the channel as a whole. And if you like what you continue to see, well, then yeah, at that point, I really would like you to subscribe, as I'd love to have you as a part of this community here. But thanks for watching. Hopefully you did okay with the quiz. But even if you didn't, that's all right. Now you know how to get out there and make the changes and make the improvements. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up, as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.